All right, guys, we are doing it again. I made another video, Insurance Specialist Reacts to TikToks, and I just had way too much fun recording that video and looking at all the TikToks. And I went on and I looked at a few more TikToks, and there's so many good ones that I just have to react to and give my 2 cents on. So in today's video, we're just going to be going over part 2, Insurance Specialist Reacts to TikToks. What is up, guys? For those of you who do not know me, my name is Philip Setter. I'm the founder and CEO of Affinity Life, where we helped 100 Canadians find the right life insurance coverage at the right price, all from the comfort of their own home. If that sounds interesting to you, I'll put a link in the description and you can check it out. But without further ado, let's get right into the video.
Son, I'm paying $200 a month for life insurance right now.
Okay, a little expensive.
Oh, Mom,
not too
that's
bad,
a lot
but
of money.
a little expensive.
What is that going to do? So if I keep paying it for 30 years and I pass away, you're going to get $500,000.
30 years. So you have a term 30 for $500,000. You're paying $200. Okay, it's a little expensive. I think like the going rate for like term 30, $500,000 for a female. She looks like she's 30. Might be like $40. I don't know. Let's look it up right now. Hang on. Let's look it up. Okay, just a casual shout out for my company. Don't worry about that. So let's say June 15th, 1990, female, non-smoker. Let's see the quotes. Okay, term 30, $500,000, same product, female, in her 30s, non-smoker, RBC, 39.37. You're overpaying by $160. Okay, let's keep going.
$500,000? Wow, that's crazy. But what if you don't die? So if I don't die in that 30 years, we get every penny that we've paid in back tax-free.
Okay.
Wow, that seems too good to be true. Does it cover anything else? Yeah, so while I'm covered, if I get a critical, chronic, or terminal illness, we also have access to that $500,000.
Yep.
I don't know. That just seems too good to be true. There's got to be a catch. No, there's no catch. And follow me to learn more about 100% return of premium life insurance.
Very cool. I think this is an American thing. We don't really have this like return of premium term life insurance here in Canada, but I know in the States, they have a bunch of different types of insurance. That's kind of cool. So it seems like, I don't know, that seems a little bit expensive. Like what? So here's the thing. When you look at any type of return of premium product, whether it's insurance or anything else, you want to take like what the base amount of insurance, what it would cost. So like you saw right there for term 30, it was $40 a month basically. So if they're saying you can do an ROP, so you get all your money back after 30 years, if you pay $200 a month, you need to basically take that difference of what it actually is costing you, which is the $160 for the return of premium, and then think, okay, if I just paid the $40 and put that into, you know, the insurance, and then I took the other $160 and I put that into an investment, what would that give me? Let's do the numbers right now. Let's do it live here right now. Let's go. Compound interest calculator. Okay. Current principal, we're doing $140. Annual addition, what's 140 times, let's go to calculator. 140 times 12. Okay, 1680. So let's just go 0. Let's go 1680 per year. We're going to grow that for 30 years. Okay. And what do you guys want to grow this at? Let's grow it at 5%. Let's be conservative. I would have put 6, but we're going to put 5. Okay. So at the end, you're going to get $117,198 back, and then your term insurance is going to be a cancel at that point. So let's go back and see if we times this by 30, what we get. So yeah, okay. So basically, if you get your return of premium back, it's going to be $50,400 that you get back after 30 years and you cancel your life insurance. Or you could just get a term life insurance product for like $40 and then put the other $160 into an investment and you'd have $117,000. So it's not always like this. I'm not saying the return of premium is always bad, but sometimes it's not the best option.
There is only 2 different types of life insurances that you need to know about. There's term insurance and there's permanent insurance. And
100%.
I'm going to break it down for you. Let's go. So what is term insurance?
Nice.
Term insurance is basically just insurance only. It's a very cost-effective way to protect your family, and it's very cheap. If you're in your 20s or 30s, you can easily get a $500,000 policy, a term insurance for 20 years, and only pay about $30 or $40 every single month.
She's not wrong.
If you're a non-smoker. So what are the benefits of a term insurance? It's very cheap, it's cost-effective, and it's a great way for you to protect your family at a fraction of the price because there's no bells and whistles and there's no investments. It's just insurance protection, so it gives you peace of mind at a very small price. The only downside to term insurance is that you will likely have to renew it. And so let's say, for example, you are 30 years old old, you need $1 million in coverage.
Okay.
You can easily get a plan for about $30 or $40 a month, very cheap. But if nothing happens to you during those 20 years and you're still needing coverage, you have to renew it again.
Maybe.
The same plan that used to cost you $40 a month, now since you're 50, it's going to cost you about $200 or $300 to get that same plan. So let's summarize. Term insurance is very good for covering temporary insurance needs. Things like a mortgage, or if you have young children and you only need coverage for the next 20 or 30 years, it's great because it's cheap and it's cost effective. However, term is just like renting. You rent, but you never own the policy.
That's how I explain it.
Part 2 to learn more about permanent insurance.
We got to find part 2. Nail 100%. I love this video. She nailed it. This is exactly what I say in every single video. Term life insurance, probably the best option. If you're young, you have kids, you have a mortgage, you have a temporary need for life insurance, and then you might not need it when you're older. So she's saying, you're 30, you get a term 20, you're 50 at this point. I would reevaluate the need for life insurance. I'm actually just going through this. I had talked to a couple clients yesterday and they were like, hey, we're like 47, 48 now. And their term 10 that we got them like 8 years ago or something like that is just about to expire. And so they're saying, what should we do? Should we renew it? And I said, well, what's going on? Tell me about your life. And like, okay, well, one kid's 14 or one kid's 12. Here's our mortgage. Here's what's going on. I said, okay, well, why don't we go out on the market, find another term 10. So like, she kind of made it sound like you would renew it for another 20 years. I would probably at that point say like, how much longer do you need it? Maybe we're not going to renew it for 20. Why don't we just renew it for 10 years? Because you're probably going to be 60 at that point. Your kids are going to be out of the house. Mortgage is probably going to be paid down. You have some investments. It's closing in retirement. You might not need it anymore. So, but 100%. I love what she's saying. That's awesome. So 10 out of 10.
If you're a parent, here's one of the best gifts you could possibly give your kid. Whole life insurance policy. You take out a policy in your kid's name. If you're making payments for just 20 years and then the policy is paid off, at the age of 20, you then take the cash surrender and you pay yourself back for all the years that you put in. What happens is your 20-year-old kid till they're 40 will now be accumulating the same amount of wealth you just did for them. They have an insurance policy with a lot of cash in it they could potentially use to invest in things, and they have a life insurance policy that's completely paid off for. It's one of the best gifts that you can get.
Look at this guy on the left. Like, this is like another insurance advisor who's like, I don't feel like making my own videos, so I'm just going to like do a duet and say nothing. I'm not going to add anything, but just
give them in order to start their life off with a lot of money.
Yeah, I've talked about this before. I'll talk about it again. Permanent life insurance on your child, I don't think is the best option. However, just like I say with buying permanent life insurance as a quote unquote investment or wealth building strategy for yourself, there's so many other things that you should look at first. You should look at, your own RRSP, your own TFSA. I know in the States, you guys have different kind of tax sheltered programs. Look at those more simple, less complicated, less things that can go wrong. You can put in 1 year, you can take the next year off. If you don't put in the early years, it's not going to collapse upon itself. There's less things you have to worry about. You don't have to take a policy loan. You don't have to worry about interest payments. You don't have to worry about capitalizing and dividend scales and dividend. You don't have to worry about any of that, right? So just like focus on those simple, easy to understand strategies and then start layering more and more things on if you want to in the future. So it's like, okay, yes, if you got your own term life insurance in place, check. You got your own RSPs, check. You have a high income, check. You got TFSAs, check. You got all your RESP on your child now, check. You start to check all these boxes and it's like, yeah, sure. It's not like the worst thing in the world. Okay, we're building some wealth strategies or wealth accumulation strategies for our children. They can use it for sure. And, whatever, if you love life insurance, sure. But it shouldn't be, this isn't like a priority number one, like your baby's born. This is the first thing you're going to do. There's so many other things that you could check before you would consider this as a strategy.
Here's how it works. You put your money inside a life insurance policy. A portion of your money goes towards the death benefit protection that covers your family if you die. But the majority of your money is actually going towards the cash value side of the contract. Essentially, that's like equity inside your own death benefit.
Okay.
On top of your money that you pay into the cash value, the insurance company pays you dividends that help grow your cash value even faster. We then go to the insurance company and borrow against our cash value. We use our cash value as collateral to support a loan against our own policy. We're able to
I don't know if you use it as collateral. You would just take a policy loan. That's not using it as collateral. When he says collateral, you're talking about using like pledging as collateral to a third party lending institution. Policy loan is not pledging it as collateral.
Use this money completely tax free. And since we never actually...
It's completely tax free if you're in the United States. If you're in Canada, policy loans do become taxable in excess of the adjusted cost base of the policy. And you're probably wondering, what the hell is that? all that is, in the early years, you have basically no ACB within the policy, you have a very high ACB within the policy, and the later years, you have a very low ACB within the policy. And so if you took policy loans at the beginning, when you first bought it, and within the 10, 20 years, you probably aren't going to pay any tax on it. However, in the later years, you probably will be paying some taxes on it. Now, people that do practice infinite banking in Canada, the way they get around this is taking collateral loans, which is where you pledge that asset to a bank and they give you a collateral loan, and that's not considered taxable. But there are some downside to it. It's a little bit more complicated to get a collateral loan than it is a policy loan, and it really goes against the whole infinite banking concept of like, don't trust the banks and stay away from the banks. But then in Canada, they're like, we need the banks though. Anyways.
Take the money out of the policy, all of our cash value continues to accrue the dividends from the insurance company uninterrupted.
Yeah, so I'm going to be making an infinite banking video here. Actually, today I'm going to be recording it, so it should be out sometime soon. Infinite banking, I honestly do think it is a great strategy. Here's the thing, it's not like revolutionary or anything like that. You're essentially taking the principles of whole life insurance and cash value insurance, which is a wealth building instrument, and you're taking it in a specific way. Really, all infinite banking is a marketing strategy that a guy named Nelson Nash came up with, and he built kind of this whole principle around it, how to use money, how to use whole life insurance, how to build the values and leverage it, etc. And I compare it exactly like I compare it to any other type of leverage strategy. I think they're really good for a certain group of people. And usually these are high income earners that have excess cash. They're highly disciplined. They can commit to a type of strategy like this. They know they're going to have cash in the future. You know what I mean? They can put everything into this, and they're not worried that they might run out of money in like 3 years or 4 years or 5 years and not be able to pay this policy, because really the strategy collapses if you can't pay into it. So it's a great strategy, but it is for a very specific person. And what I don't like about some of these TikToks is they make it just seem like it's everybody. It's like, hey, this is good for everybody, secrets to the rich. But it is a good strategy for a certain group of people.
When you first graduated, either high school or college, what is the best piece of advice you would give to your younger self?
Buy life insurance.
Buy life insurance.
Whole life now.
No.
A lot of things people don't understand is this America.
Okay, so this guy, the best advice that he can give anyone is buy life insurance. No, 100% not. I like how they make it seem like this is how I got rich. Buy life insurance and you'll get rich just like me.
Namely, the Rockefellers started with whole life policies
The Rockefellers are one of the richest families in America or the world. You're telling people to do things that people who have literally unlimited money are doing. No.
Allowed them to basically put a policy on 15, 20 members of the family, and they put it in a trust that kept their money together. They borrowed money from the trust to buy cars and buy houses instead of paying it to the banks. And they've done that over and over and over again.
I agree with them 100%. Majority of people think life insurance is for the deaf, but what they don't know, if it's structured correctly with the correct company, you can make these policies into your own bank, just like what the Rockefellers did. See, the nice thing is everyone can get this, but the hard part is finding the right agent who knows how to design these policies. But you're in luck, because you're looking at him right now.
100%.
Click the link in my bio
Click it.
if you want to use these policies
Let's do it.
as a financial tool.
I feel like I'm just beating a dead horse to this point. They make it sound like this is like the secret way to get wealthy, and this is how these rich people got rich. Nobody got rich buying life insurance. Rich people use life insurance to grow their wealth because they already have tons of assets and cash and money and financial security, and they've already maxed out multiple other different. You think rich people aren't using 401ks or TFSAs or RSPs or all these things? They're using all of those things and other things and every different strategy under the book. It's like, how can we structure all of our financial affairs in the most efficient way possible? And they're doing that by every single way they can. Life insurance is just one of them, but that doesn't mean it's going to afford you the exact same results. You need excess capital to put into this. You need financial security. You need to, if you compare this just apples to apples to basic TFSA or RSP, if you're a low to middle income earner, earning under $80,000 per year, 70% of Canadians are earning less than $80,000 per year. If you're in that category, this is not a great strategy for you. It's not worth it in the end. It's way better if you just invest in your TFSA and buy some dividends or stocks or something in there that produces you an income. And it's There's no strings attached to it. You can take the money out if you need it. If some type of emergency happens and you need access to it, it's there. If you can't pay it the next year, there's no problem and you can go on your way. I feel like I'm just beating it. I feel like every single TikTok on TikTok, every single financial TikTok is just like permanent life insurance is the secret. Anyways.
So here's how the rich use insurance.
I'm not even going to watch this.
6 top life insurance myths debunked.
Here we go.
Life insurance
Give it to me.
is only to bury the...
Life insurance is for the living, not for the deceased. These are the 3 main features of life insurance. 1, death benefits to leave a legacy. 2, generate income for your retirement from the cash value. 3, tax-free benefits. Side note, life insurance is not to bury you, and term life insurance has no cash value and it will expire.
I should get life insurance online.
Online quotes are easy, but it's a one...
Only if you want to work with Affinity Life.
Size fit all. If you want to build wealth, plan for your retirement, or protect your business, online quotes will not cut it.
Permanent life insurance.
I mean, he's not wrong actually there. I mean, most online life insurance companies, including my own, they're very simplified products. And I don't mean like simplified issue products. I just mean like it's more of a one size fits all. The reason for that is because it'd be incredibly complicated to try and build out an online application for a million different products. So we have to simplify at some point. We have to say like, okay, what are we going to focus on? Let's focus on a few specific products. And he's absolutely right. I mean, it goes the same with my company. If you had any type of advanced case or something very specific, I would not recommend you go through the website. I would recommend you contact me directly and be like, hey, here's my unique scenario. Like I even say on my website, there's a section in the FAQ where it's like, what if I have a business? And I'm like, if you have a business, don't go through the website, contact me directly because you can put your life insurance for the business and then you can pay for it with after corporate tax dollars, which is way cheaper than personal tax dollars. So he's not wrong there, 100%.
Is only for the...
Okay, well, here we go. I mean, all right, I'm ready for this. This is my myth, apparently.
Permanent life insurance is the only product that combines every tax benefit in it.
Dude, he's yelling. Do I yell this loud? He's yelling. He's like, permanent life insurance is the only one that pays me the big commissions.
Tax code. You can put your money in it and take it out without paying taxes. No other financial...
Unless you're Canada and it's policy loan.
Instrument.
Or like a million other scenarios. If it's in a corporation, you try to take a personal loan, it becomes taxable. The cash surrender value within a corporation attributes to the capital gains in the corporation when you pass away. Policy loans, it's all good. It's all good, Philip. It's all good. Don't worry. It's all good. It's all good. It's all good.
Does that? I know it's enticing and all cannot afford it. That's why it's okay to start small. Start with one that you can afford and increase.
I do not recommend that. Do not start small. Just start small. Just whatever I can do, just sell a little bit more commission and make a little bit more money. I don't know if that's what he's trying to say, but here's the thing, okay? Like I mentioned here in Canada, we have policy loans and we have collateral loans. And again, policy loans become taxable later on in life. And so when they try to pitch this strategy as like, hey, invest in life insurance and you can use this during retirement, policy loans 100% will become taxable sometime during your retirement, depending on it. Because again, your policy loans are going to decrease your ACB as well. So when you take more of them, as well as when you get older, it's going to go down. And when that hits 0 or your policy loans go in excess of that, it becomes taxable. Okay. The other thing that you can do again is a collateral loan, but collateral loans are usually not available for very small policies. Like most third-party lend institutions want to look at $500,000 or more. And yes, I know the advisors are going to be like, I got a policy loan for $90,000 or $50,000. And yes, you can get them, but the lenders in that area are fewer and fewer. Less and less lenders want to do collateral loans on this. And what's going to happen in 30 years? There's probably going to be less and less of them because there's very little money in the banks for this. And the rates aren't going to be as preferential. The interest rates are going to be higher on it. The percentage that you're able to borrow might be less than 90%, might be 80, might be 60, might be 50%. So basing your entire strategy on this, like one caveat, like, oh my God, I hope I can secure a collateral loan because I just put the only money that I could have in any investment. I didn't invest my TFSA because this guy told me start small. No, don't start small. Wait till you have freaking money. It's all good, Phil. It's all good.
Your premium over time.
The insurance I have through work is enough.
I already agree with him. It's not enough. Buy more.
Most employers offer group life insurance. These are the disadvantages.
I mean, unless your need is like really low.
If you resign, retire, or terminate, you lose coverage.
You don't need life insurance if you're single.
I had a battle on LinkedIn yesterday, I think, with this guy. Because if anyone knows me, if anyone follows me, I adamantly, like, I want to convince people out of buying life insurance. Like, I feel like that's my mission as an insurance advisor, is to be like, yeah, you don't need life insurance. I have two stories for you. I'm going to tell both. The first story is this LinkedIn guy. So I put out, and this guy, like, he liked me, and I feel kind of bad. He's a nice guy. And he was sharing, here's the thing, I think advisors, like, they see some of my videos and they're like, oh, it's a really well done video, you know, good subtitles, good that. And they start sharing them and they're like, look, he can articulate this in a way this guy knows, like, take the advice from this guy, because he, like, you don't take it from me, take it from him. And I don't think they know how adamantly against life insurance in most scenarios I am. So then after they after this one guy reshared like all my posts, then I put out another one and I was like, 7 reasons you don't need life insurance, and if you buy it, you're wasting your money. And he was like, wait a second, I don't agree with this. I think everybody should have $50,000 minimum of life insurance. And so we got in this like long LinkedIn conversation. I was like, why? For what? For what? What purpose? And like, well, they have to bury him. I'm like, what if there's no one there? If there's nobody there to bury you, I mean, the government just pays for it. Like, if no one's going to claim you and there's no funeral, there's no dependents, no one, it's like, yeah, it's no problem. Like, just bury him. It's fine. We'll pay for it. So like, I got into a little bit of an argument with him. And I was like, we don't need to sell $50,000. That's the first story. The second story is this guy called me and he left a voicemail yesterday. His name was Dan. He called me and he's like, hey, this is Dan. I'm looking for a good insurance company. Call me back. And I called him back and I was like, Dan, I got your voicemail. I heard you're looking for a good insurance company. Unfortunately, that's an oxymoron. There are no good life insurance companies. And he died laughing. And then we had a long chat and he's like, I want like 50,000 or something to, and I was like, well, you married? He's like, no, I'm not married. I'm like, well, do you have kids? He's like, no, I don't have any kids. I'm like, well, why do you want insurance? And he's like, oh, I just don't want them to like, have to, bury me. I'm like, who? He's like, well, anyone. I'm like, who? And he's like, well, I don't know. Anyone. I just want the insurance. And I'm like, I don't think you should get it. It's going to be expensive. You're a smoker. You're like in your 50s. I think you should just save your money. I was like trying to convince him. I'm actively trying to convince him to not buy life insurance. So I can't wait to see what this guy says, is what I'm trying to say.
With no dependents.
The only person that will take care of the older person you will become is the young person you are today. You can be...
The only person that's going to take care... The only person that's going to take care of the old person that you become is the young person. Okay.
Young without money, but not old without money.
Life insurance is...
sorry, I don't understand that at all. So he says the only person that's going to take care of the old you is the young you right now, and you can be young without money, but you can't be old without money. What does being old without money have to do with life insurance? Like, it's not, what are you, like, gonna kill yourself and then use the life insurance when you're old? Like, that doesn't make any sense. Like, you're not buying life insurance to get rich. You're buying life insurance, unless he's maybe talking about like a permanent life insurance plan. But then again, we go back to the same argument. That's like, no, just invest it into a TFSA or an RSP or some type of other investment.
Too expensive.
If cost is the concern, get as much life insurance that you can afford now and increase coverage later. It's easier and cheaper to get life insurance when you're young and healthy.
Yeah, he's not wrong. It's definitely cheaper to get life insurance when you're younger. However, there's like a ceiling. There's basically like a ramp for life insurance. And a lot of people say like, oh, get life insurance when you're young and lock in the rates. Here's the thing. In Canada, I don't know about the United States, but in Canada, when you're 20, life insurance is actually more expensive than if you were 30. The reason for this is because when you're in your 20s, you do dumb shit. And the possibility of you dying is quite high. And they realize that when you're in your 30s, you probably have some of your life together. And so if anyone tells you to buy life insurance when you're 20 to lock in the rate, quote unquote, it actually is cheaper when you turn 30. Just wait until you're 30. And then again, the way the term life insurance works, the price, it's like from 20 to 40 is like this. It's like it's really not that much of an increase. So anywhere in there, if you buy some life insurance, if you're waiting till you have some dependents, whether you're married and you have kids and you have a mortgage and all this stuff, don't stress about it buying in your 20s or your 30s or even your early 40s. If you get to your like late 40s, like mid 40s to late 40s, and then you're like thinking like, maybe I want to settle down sometime in the future, maybe I should lock in my rates. It's not the worst thing in the world, but I don't know. I'm just opposed to spending money on something you don't have. It's like buying car insurance and you don't have a car, right? Like, yeah, maybe it might be more expensive, but maybe you'll never have a need for it and you can just save the money your entire life. Like maybe never buy life insurance. Think about that. Don't tell the advisors this. This is real secrets that no one knows. The secret is you may never need life insurance. Ever. and you never have to pay the insurance company and you can just pay yourself. Crazy, I know. All right. I think I've had enough for today. I hope that you guys enjoyed today's video. If you guys have any questions, just drop them in the comments below. And if you guys are enjoying this content, all I ask is that you give it a thumbs up, and I'll see you guys in the next one.